Back to the special broadcast of SA Today as we unpack that massive decision then by the South African Reserve Bank's Monetary Policy Committee that has decided then to cut interest rates by 100 basis points. Let's unpack this in a little bit more detail now. What does it actually mean and how big a deal is it, considering where we stand as an economy and, of course, in the global picture as well? Dikapa Sidiane is the MD of Sidiane Financial Services joining us in studio. Dikapa, that must have been a move that perhaps drew some applause from you?
Absolutely, and good afternoon to the viewers. Corona has really made us to be aside from each other, but that's perfect. As you saw on the consensus was mainly towards 50 basis points. And this is actually a surprise on the upside because ever since Mr. Khanyago was appointed in November 2014, he has never done any move which is close to 100 basis points. So this is, I think, will be well accepted by the market.
Yeah, it certainly will be. I mean, as you said, the bank itself has not made a move of 50 basis points or more since 2012, so it's really, really huge. Does it signal enough, though, for an economy that needs the growth, that is, of course, going to deal with the coronavirus? He did make note, and really just if we go into his statement, he really does say in the end that monetary policy, however, cannot on its own improve the potential growth rate of the economy or reduce fiscal risks. He's basically saying, I can give you a leg up, but in order to push yourselves over, the government is going to have to do more here.
Absolutely. And I think he could have maybe given us an indication. As we said, the QPM, the quarterly projection model, it indicates that there will be another cut in the first quarter of next year. And he has brought forward all these other cuts which were projected for 2020 and gave us 100 basis points. As you know, the last MPC, he did indicate that the QPM indicates that there will be 25 basis points in the first quarter and 25 basis points in the last quarter. So all those have been brought forward. But my problem that is that the cut of the interest rate does not stimulate the economy tomorrow or next week because of lack of demand. When everybody is sitting at home, shops are closing, there's supposed to be only 100 people in the gathering, there is absolutely zero activity, if any. So we have to stimulate demand somehow. So there's going to be a problem on the demand and the supply side. And Economics 101 tells you that if there is a problem there, then the economy comes to a halt.
Yeah, and I suppose then, in that point of view, the South African Reserve Bank has done, in this instance, in this meeting particularly, all it can do really to supply. It's a chess move to say, over to you, government. What do you expect government's retaliation perhaps to be to something like this?
I honestly think, our economy is very much based on the employment which is created by the SME, the small and medium enterprises. These are the guys who are getting punished mostly because of the current crisis, the health crisis that we have. Even prior to that, we were already in a recessionary environment. Now, the corona has just exacerbated everything to have a nosedive in the market as well as in the financial market. So I would have been happier if he could have done something towards the commercial banks. Commercial banks are very much exposed to the SMEs, which, as I said, are the backbone of our employment. Our employment is close to 30%, depending on which formula you're looking at. So you should have maybe eased the commercial banks' trajectory in a sense that they will be able to structure the debt of the people, because most of these people who are going to be off duty, lack of productivity, some of people will be laid off, but at the same time, they still have bonds to pay. They still have car finances to finance. They still have credit cards to finance. So the banks have to sit down with each of their corporate investment banking clients to say, how do we structure this? Because you do not want defaulting clients. You do not want non-performing loans.
Yeah.
So I would have really given them a leeway to say, if you do this, then we will be accommodative. They did allude to it,
Sure.
but they indicated that the capital buffer, or as he said it, the counter-cyclical capital buffer is zero.
Yeah.
So there is nothing to give to them. So I would have been happier if, the clients of the banks could be maybe looked after in a better way.
Mr. Sidiane, would you think that a time like this perhaps requests and desires and necessitates that the Reserve Bank perhaps gives in just a little bit when it comes to their mandate, which is price stability? They have said then that they expect inflation to still be 3.8% for 2020, 4.6% for 2021, 4.4% for 2022. In that case, you are still around the midpoint. Why worry so much? Why not loosen things even further then?
I think if you look at the mandate, which he always emphasizes very clearly, the SARB has got to protect the value of the currency in the interest of sustainable and balanced economic growth. So if the currency shoots the way it has, previously in the last MPCs, it was around 1460, I think, and now it has gone as high as 17, 18 to the US dollar. So for him to fulfill his mandate, he has to be a little bit more aggressive.
Yeah.
Obviously, the 100 basis points, as I said, will be viewed as positive by the market, but maybe it's not enough to stimulate what we have because of the health crisis that we have. If we have a health crisis, if it's not managed properly, and I must say the government has done quite a lot to be able to counter the COVID-19.
Yeah.
But if it escalates, it may have a very negative impact on the financial markets, which are already under stress, as well as the economic crisis that we may encounter.
Yeah.
And we do not to get there at all. I think his advantage is that the inflation is within the midpoint.
Yes.
And that gives him comfort.
Sure.
And he still has a lot of faith in terms of the interest rate where he can be able to cut.
Yeah.
Unlike the ECB, which has got nothing, the Fed has got absolutely nothing.
Yeah, still a lot of room.
That's why we see quantitative easing. And ECB, as we saw this morning, has listed out 750 billion euros.
Yeah. Mr. Sidiane, we're going to have to leave it there. Thank you so much for the time, though. Really appreciate it. As you said, still more room then for the South African Reserve Bank to cut interest rates there. Dikapa Sidiane, the MD of Sidiane Financial Services. Now, of course, we do come back to give you a little bit more when it comes to the analysis of this unprecedented decision. We are living in unprecedented times. So just how far could the Reserve Bank have actually gone? 100 basis points will always be sufficient in a time, I suppose, like this. But is there more room a little bit later? We'll chat about that right after this. Stay tuned. This is SA Today.